Hi guys, welcome back to the channel. Welcome back to another technical analysis video. We are taking a look at the Internet Computer, ICP, and we're going to be taking a look at the technical analysis on the daily and weekly timeframes, giving my thoughts and opinions on the macro view for ICP. So as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you happen to be new and you've stumbled across the channel, well done. Thank you. Why don't you go ahead and subscribe and you'll stay up to date with all the content that we do here at Cheeky Crypto. So let's jump into today's video then. So here we obviously have ICP paired up with USDT. We're on the 1-day Binance chart, and we did see yesterday a rejection here on the 50 exponential moving average here for ICP, right? So you can see right in here, this is where the rejection is. So for anyone who doesn't know what the exponential moving average, basically this one here is a 50, which means 50 candles across a period of time on this particular candle daily chart. So each one candle's a day. So 50 days, this is what the moving average was, right? It was $14.04. And basically here is where we saw a rejection on ICP's price. Now this happened to fall in line with everything else that was going on yesterday for the crypto market, right? We saw the SEC kind of attack or go after Robinhood, and as such you have of course seen basically the crypto market pull back. Now regardless to that action that was taken against or going to be taken against Robinhood, we're always kind of looking quite bearishly at this chart for ICP, for Bitcoin, for the crypto market, simply because we are coming up against these resistances that we were in previously. And you can kind of see this right in here. Let me show you, right? If I go ahead and snap this on, you can see this pocket between $13.58 and $14.12. This is the area where we're getting the resistance, right? This is where basically a lot of selling pressure was occurring. And at the moment, you can also see that there's a pocket of buying pressure as well coming in down here on this low side. But most recently, we closed inside this position, right? This was between $12.15 and $12.87. And yesterday, we actually closed inside this. And that's the first close we've seen in this range since, basically the 17th of April. So it's actually quite meaningful. We were in a ranging market. Now we are no longer in a ranging market. We've kind of got this change of characterization in the chart here, which we'll probably talk about that in a little bit more detail when it comes to smart money concepts. So do watch out for that. Here we can see the downward trend line that has now 3 touch points on it, okay, indicating that we are remaining in a bearish state of play here for ICP, right? So we have lower highs and lower lows. Okay, so an interesting one for ICP from this kind of traditional way of looking at it. Now the positive, because there is always a positive when it comes to anything, is that we are above the 200-day exponential moving average. Okay, that's 200 candles. And that is showing us with great strength as a support level, and has been support since we crossed it and confirmed that this was support on the 10th of November 2023. So right now, although we have this kind of movement to the downside, I'm looking at this as a bit of a wedge where we are actually going to be finding support on that 200-day exponential, where we are going to be looking for that breakout opportunity, that big break to the upside for ICP. Now, nothing is guaranteed. It's possible that we do lose the 200-day exponential moving average, but I'm looking at this thinking to myself, in the next kind of week or so, we might be primed for a bit of a breakout situation on ICP, and we start to see a bit of a run back to the upside. So I want to be really, really mindful over what that might mean. Now, if we do lose the 200 EMA, then of course we want to be thinking about that as a short position. If we close lower than the 200 EMA, we're going to put a nice tight stop loss and we're going to short this thing, and it will go down quite deeply, in my opinion, right? If, however, I'm right about finding support on the 200 EMA, that's the long position with a stop loss lower than the 200 EMA, and we're going to look for a breakout of the trend line here, okay, and we'll be looking for great risk reward ratios. So there's both ways of kind of trading this one. Keep a close eye on it. Ultimately, we're going to be looking to trade the breakout or breakdown on ICP. So let's go ahead and take a look at smart money concepts in here. Smart money concepts is still bullish. Okay, so although we have this kind of negative move to the downside, there's only really the minor change of characterizations going on from the chart. We are still in a bullish structure on the macro scale, right? So if we zoomed out of this, you can really see that we're in a bullish momentum move to the upside above the 200-day exponential moving average, although we're currently lower than the 50 simple moving average and the 50 exponential moving averages, our character changes, or the lack of character changes, are telling us that nothing has really changed. Okay, we still remain in bullish times. So we've got positive bullish changes through 2023 into 2024. We've got confirmation of that most recently in the 26th of March this year. And although we've kind of seen a little bit of downward price pressure here, it has actually still meant that we are right in line with where we think things are likely to go, i.e. we're looking for that next move upwards. So I'm not too concerned about smart money concepts. It's looking pretty good. Now, if we go ahead and take a look at momentum, we can see that the stochastic RSI is actually down in the oversold area on our daily time frame, and that's looking pretty positive, along with the weekly, the 8 hour, the 4 hourly, right? It's only the monthly and the 1 hour that's actually showing us with some negativity. And we want to be quite aware that we are going to be looking for momentum to shift upwards on ICP in the coming days and weeks, potentially into the next couple of months. It's going to take some time, but I do think about it quite positively. The relative strength index, which is the yellow line on this one, is showing us with actually a bit more room to the downside. It's showing us with weakness because we are lower than the 50 level on the relative strength index, right? We can, of course, rally up, but I just don't think that's really where we are right now. I still expect further moves to the downside before we get that breakout. And that breakout, I think, was then going to see the RSI test out the 50 level on the relative strength index and hopefully push up into bullish territory on that one as well. We take a look at the laggy indicator, that is the MACD, and it's showing you pretty much a choppy kind of indecisive market with the line crossing and these moving averages crossing over each other, and also the histogram showing no real major movements whatsoever. This is an indication that things can go in either direction, but this is a problem with the MACD. It's not going to give you the kind of the predictive capabilities that you're truly looking for. It's only showing you what's already happened. And if we reflect on what's already happened, well, that's just basically this little choppy move that we've seen going kind of sideways over the last little while. So all in all, I'm not terribly too concerned over what is going on for ICP from a smart money concepts point of view, from a exponential moving average point of view, simple moving average point of view. Stochastic RSI is looking pretty good. RSI needs a little bit of work, but it's not the worst. MACD could be better, but again, those things are quite inconclusive. Elliott wave theory, on the other hand, isn't giving us that perfect picture. And there's a couple of reasons for this. We can look at the market through a couple of different ways, a couple of different lenses here. So we do see a 5-wave movement for this breakdown from the recent highs that we had on the 27th of March, right? We can see this as a kind of 5-wave movement coming down here. And that is a little bit of a concern because 5-wave movements only really appear in a couple of places. And we don't want this to really be an indication of bigger collapses in the market. So I want to be a little bit aware of that. There is a potential running flat scenario that goes on here, which would be this one like this. I don't like the idea of that one because it doesn't really explain this move to the upside very well. So I don't think that's really what's going on. So this could be either a really big running flat situation, where we kind of see a move like this, where we have the high that came in, and then we're in this kind of choppy corrective move here, okay? And it's a running flat because the C wave just doesn't come down lower than the A wave. The B wave does, in fact, go higher than the origin of the A wave and all that kind of stuff. Again, it's not the best fit. I guess what I'm trying to say is I'm trying to explain a reason to not drop down lower than that 200 EMA. That's kind of what I'm trying to avoid. So it's one of those, like, we're going to keep a close eye on it. Hopefully we can get a breakout higher, indicating that we are essentially going to be done with this low. Really, for that, we are going to be looking for a breakout for ICP above $20.98.5. Anything above that is going to put an end to the idea of losing the 200-day exponential. And if we do drop down lower than the 200-day exponential, lower than the previous swing low, then yeah, we are probably looking at this as a zigzag pattern going down deeper. And for that, we would, of course, have to target out a pretty bearish target, unfortunately. We would have to be talking about $7 to $8.30. And so we don't really want to do this. It's not the ideal situation, but it's something that we need to be mindful of should that play out. Okay, that would be a giant 3-wave movement to down here, right? So if I said, but like I said before, right, there's a short-in opportunity here. If we do lose that 200-day exponential, tight stop loss, target down here at the $8.30, great risk reward ratio, make some profit on the way down. It is still a corrective pattern, which means you would still rally up afterwards. This would be a short-term move if it were to play out. Hopefully it doesn't, but it's something to be mindful of. Let's roll this up into the weekly though, right? So the weekly time frame is above the 50 exponential, it's above the 50 simple moving average, and also happened to coincide, by the way, guys, that 50 simple moving average right in line with that bearish kind of pattern I was just talking about there. For the most part though, we will be looking for a bit more of a run to the upside, hopefully. But if we do have to move down first, I hope that the 50 weekly simple moving average does fall in line as the support level for ICP so that we can then start to run to the upside. Let's throw smart money concepts on here, and we can see that there isn't actually a lot going on the weekly time frame. There's just simply not enough data for smart money concepts to give us anything meaningful. You can of course see all the minor changes of characters from the previous structures. For example, you have the change of character, the bullish break of structure. These are of course indicating on the daily time frame. That's just being depicted here on the weekly as well. But for the most part, nothing on smart money concepts really to be terribly too concerned. We have a great move to the upside, and we have got this kind of higher low situation, and now we're just breaking down from there on that one. The stochastic is just down in the oversold area but has quite a way to go. The relative strength index is still above the 50 level. It did have bearish divergence flagging up, as you can see right here, and this is the difference between the relative strength index and the price action. So bearish divergence there was indicated just as we started to see that reversal on the weekly time frame, but we are above the 50 level, mid-level on the RSI, so we can still see some growth to the upside on this one. I don't think necessarily that we're in a weekly bearish movement here. I just think this is a nice healthy correction for ICP and all that kind of good stuff. So for the most part, nothing much to really say I'm overly too concerned with. I think hopefully we can get the break out to the upside. If not, expect price to come down. It's going to be great for accumulation. It's going to be great as an opportunity to build out those positions, to dollar cost average, and all those wonderful things if you choose to do so. But guys, why don't you check out this video right here where I'm discussing what is going on when it comes to BTC.